This is how we actually do the gag reel, the outtakes. So one day we'll put together, you know how you have like a biggest hits? We'll have a biggest miss. And depending on how great that is, we might actually show it because that would be kind of funny for other people to laugh at us. Maybe not on second thought. All right, it's 2:01. So I'm going to get us kicked off here. I don't believe in everything that I'm seeing and hearing about inventory. And I'll tell you why I don't believe that. Because collectively, we continue to set records and break records. And we know that you guys are working so hard. I talk to many of you regularly, and I know Todd does, and it's like, what? There's no summer vacation. We're busy. We're slammed. We have so many things. I was at Peachtree City for a sales meeting last week or the week before, and it was like there was no rest over the 4th of July weekend. It was just writing contracts and securing them. So my hat is off to all of you for an incredible 6 months, going on 7. And I wanted to highlight a couple things in June, which you may not know. June was the first month ever that we closed over 400 million in volume ever in our 91-ish year history. So congratulations. That is insane and exceptional. Another record that we broke was our highest average sales price ever at 576,000. That is amazing. So congratulations. You guys are killing it. I know you've got your armor on and you're going to work every day, and we're really proud of you for that. So thank you for that. We are a couple of things other than that is, even with that, we still are not quite hitting our budget goals, which is okay, because we have thin margins, which is no surprise, and our expenses. But in a positive way, we've got our family of services that help us. Now, remember, budget, you kind of set a goal and you're not really sure in the middle of COVID. So bear that in mind, even though we didn't quite hit that, we're performing well and obviously collectively continuing to set records. So really proud of that. And thank you for your ongoing support of our mortgage, title, and insurance. That's really amazing. And you guys are knocking it out of the park. So one other thing before I turn it over to Todd and we get started, we have some unique and fun things to kick off with today. But one other thing is our pendings. So our pendings are kind of the pathway forward. And what we keep hearing is we're out of inventory, we're out of inventory. We're not, and we haven't run out yet. And we're not seeing that going to happen. Our pendings look really strong and actually ahead of projections for the month of July. So that bodes well for continued success. And high five, pat on the back, happy dance, however you want to celebrate. Super proud for a great first 6 months and a great June. So turning it over to you, Todd.
All right, yes, and I second everything Jenny just said as far as all of the amazing things that you guys continue to do, not only in June, but through the first 6 months of 2021. It's been an incredible year, and I'm sure that the second half is going to be just as good, if not better. So again, thank you to all of you for all that you do. So we're going to kick things off a little bit different this time around, and this was actually based on some feedback and some suggestions that all of you shared. And so we're calling this first round here Trends from the Trenches. And I've reached out to several of the brokers just for some ideas or recommendations on folks to kind of just give us a sense, a pulse of what's been going on in their particular market areas. I know that as a whole, there's probably going to be some general trends, but we're going to kind of go around the metro a little bit. We're going to go south of town into Peachtree City and those markets, just so you guys can get an update there. We're also going to go up to the North Georgia mountains. And then I have some updates from Karen McCrae, and Leslie Johnson is going to maybe share some new home stuff with us. But we're going to kind of do this like speed dating. And so those that I have asked to kind of give us an update, take about 90 seconds or so to kind of give us a flavor of what's been going on in your market. And we will start inside the perimeter with a person who is no stranger to shooting video and being behind the camera, Mr. Butch Whitfield. Why don't you give us an update on what's been going on inside the perimeter, down in the Midtown, Buckhead, downtown market area for single family?
Well, so maybe starting with word on the street, a couple agents and I, who I've spoken to in the past week, we all sort of feel like everybody's been on vacation a little bit and that things aren't selling as fast. So there isn't that firestorm that we had in the spring. And that's the only thing we can attribute it to. I don't think it has anything to do with our market shifting as much as finally everyone's getting out of town. So I've been really paying attention to market insights, and because I set them up for different neighborhoods, and as well as some quick updates that are just coming in. And I feel like more inventory is coming on the market across the board. So that's making me feel better because I've got this group of prospects, and it gives me more reason to check in with them. But I do feel like it's cooling down a little bit, but I think it's going to be short-lived. I think it's going to pop right back up when when kids get back to school or maybe our traditional fall market starts. But that's the only thing I would sum it up and say is that it's cooled a little bit, but I think it's just temporary. You're muted, Todd.
Yep, I said, yep, nope, that was fantastic. Good stuff. We're going to continue to stay inside the perimeter. And Anthony, why don't you give us an update on kind of what's been going on in the condo townhome market, specifically inside the perimeter? Let's see if we can get Anthony to unmute there.
Okay, can you hear me now?
I can hear you now. Perfect. Thank you.
Perfect. Thank you. Again, thank you for having me, and good afternoon to everybody. I'm going to go with what Butch just recently said. We've seen a cool off in the market. Everybody was able to go on vacation. School is over, so things have slowed down in the condo market. They were pretty hot at one point, but everything's kind of leveled off. So it seems like people are enjoying the summer, going away and not focus on the real estate market, which in this time of year is kind of normal. So we'll see what happens after a month or two and see if the market picks up again.
All right. Good stuff. All right, Eve Jones, outside of the perimeter, west of 400, what are you guys seeing up that way?
We're definitely seeing a little bit of a slowdown, especially in the price range 600 and higher, but we're still, we're seeing a lot of open houses and caravans coming back, which is new for this market. We're also seeing, instead of 8 offers, we'll see 4 offers, so it's still, I think, very brisk and very busy. We're seeing a lot of buyers from California, from other states, and watch out, Buckhead, they're all coming up here. So just saying. And we're also seeing a lot of rental activity. People can't find homes. So now there's a shortage in rentals, especially between $2,000 and $3,000 a month. I think the most dramatic thing going on right now is with new construction. Mm-hmm. We're seeing a lot of builders that have just stopped doing pre-sales because they can't price them appropriately because they don't know what the materials are going to cost. So they'll build the house, they'll release it, and then the bidding begins, and it's just as bad as the resale market. We're also seeing a lot of reduced commissions from builders. Mm-hmm. They're thinking we're not working very hard, apparently. So we're seeing from 2% to 2.75%. I even saw a flat rate of $25,000 on a $1.2 million home. And then some builders are including escalation clauses, but they're still giving the buyer an out. So I had a client who signed a contract, and if they have to escalate because of material costs, they're going to give them the new price and say, do you want it or not? So take it or leave it. And then lots of shortage on materials. I've seen one house sit for months because it's missing one window. Doors, paint, foundation straps. There's a good investment opportunity. Invest in a company that makes foundation straps, the little metal things in the construction. I'm going for that. And then closings are also being delayed because of appliances. And I had one the other day. because of sod, because we had this little tropical depression in South Georgia, and they can't farm the sod for the houses. So it's kind of interesting, but that's about all I've got.
Just goes to show you all the moving parts, right, to a home sale. I think I remember seeing something like 85 to 90 tradespeople, can be involved in the overall sale of a home. So great insight there, Eve. Thank you for all of that great detail. Brad, east of 400 outside the perimeter, you kind of sensing some of that same stuff too? I know you're a pretty big new construction marketplace up there.
Yeah, to echo a lot of that, I'm still trying to look up what that word vacation is. I'm not sure if it's French or, but echoing the same sentiments, working over 4th of July. I do think that most of us agents are working 5 times as hard for the same results, multiple offers on multiple properties. The new construction, we're following that same line. In addition, appraisals, we're fighting that appraisal gap with our clients. Educating them to what's logical versus the emotional aspect of just trying to win that house, and make sure that we're that advocate and adversary for them, in that advisory role. But still multiple offers, a few outliers. We get one of those up in Beaufort, 40 offers on a property, which is insane, but more often than not, it's on that lower number. Still multiple, but we're not dealing with 20 or 30 offers, and just working for our buyers extra hard, but fighting the same battles that everybody else is. Reduced commissions, new construction, it still is that issue where they are limiting the amount of homes in the market, and it's a jump ball. Everybody go after it, so it gets crazy.
Yep. Appreciate that, Brad. Good insights too from kind of that northeast quadrant of Metro. All right, Joanne Wiley, we're going to shift north to the North Georgia mountains. And for those of you that remember the buzz last week, NAR just came out and said Blue Ridge, little old Blue Ridge of all places, is the place to invest right now for investment properties. So what are you guys seeing and feeling up there, Joanne?
Well, we've had the activity's been phenomenal. We are where you guys are slowing down. We're in our summer selling season, so we're going gangbusters. Our listings are up. Of course, sales are up as well, so that kind of washes that out. We've got a mixture in our market. We've got, I'd say 40% of our market is now investors moving, doing a lot of 1031 exchanges, things like that. You've got our, second home market, of course, and then we've got the retirement. It's just been really crazy. And I'm having the same thing that they were talking about with new construction. I do a lot of new construction. I can't keep up with the pricing on it. We can't keep up with supplies, materials, all of that. So it's quite hectic up here, which is yay. But we've had an influx of, as well as of Atlanta agents coming up here and selling in the area, which is great. I love seeing everybody come up. But that being said, sometimes if you're not familiar with the area and the different nuances of what we've got going on up here, internet, can you get internet there? Is how low is the lake going to go during the season? Am I going to have a lake view? That type of thing. I think, if you don't really know the market, please refer. And I think that's about it.
Yep, good stuff. I was going to plug you guys and, highly recommend, if you've got folks that are looking up that market area, reach out to anybody there in LG, Blue Ridge, or Blairsville. Even though they're all in North Georgia mountains, they're all three unique in of themselves as well. So, pair up, team up, refer it out to one of the great team members we've got up there, and do yourselves and your clients a favor there. All right, we're going to shift south to the Fayette, Noonan, all those counties down there. Dory, I'm probably forgetting a couple, but what's going on down in our Peachtree City office and that surrounding area?
Well, we're busy, and I think one of the biggest struggles we're having right now is appraisers not wanting to admit the appreciating market that we have. I mean, I just had an appraisal come in $115,000 low, and they said it was a stable market with an adequate supply of houses. There were 7 homes for sale. 7 in all of that school district. So they're not rooted in reality. So we're having a definite issue with that. You know, I went back just for my own edification because I like to see, you know, post-COVID in 2019, great year. It was like one of the best years I've ever had. And in Peachtree City, our average sales price in 2019 from April 1st to June 30th, I used those 3 months, April, May, and June, to the traditional hot market. Our average sales price is $393,000 for that period. I looked at it for 2021. We're at 509. We've had a 30% increase from 19 to 21 in the average sales price. Incredible. And what's even better about that, like in 2019, we sold, what was it, 193 homes. Same period in 2021, we've already sold 209. So we've got inventory. I mean, we're selling homes even before, I mean, even at a more volume than we did in 2019, which I thought was interesting. Anyway, buyer's agents, all of us that have buyers right now, it is what Brad said, you know, it's like a free ball or whatever he called it in basketball, throw it up in the air and one of us is going to get it. But it is having those serious conversations. I've got 3 out-of-state buyers, 2 who will, one who will never see the house until they get here. So I think having those conversations and sending that information that we have now about concern, about warnings about the seller's market and warnings about buying a property sight unseen and having them sign it, I think is extremely important. You've got to have that education for those buyers who are from out of state and maybe aren't in the same market that we're in. I had somebody lose $8,000 in earnest money. They bought a house without seeing it. They get here, they don't like it. We're past all the due diligence. Thank God the sister saw it and it wasn't just me. But, you know, it's crazy, but I agree it is cooling down a little bit more. I'm feeling that, but I think it might be temporary. We're going to have Lawrence Yoon on our Leadership Live tomorrow, who's going to give us the state of real estate for NAR. If y'all don't know who Lawrence Yoon is, he's the NAR's leading economist. So he's going to be with us tomorrow and kind of give us his take on what he sees in his crystal ball. From the GAR perspective, Todd, did you still want me to go there or not?
Yeah, please, because I think everybody knows that, you know, actually, I appreciate you too joining us. Dory's down in Jekyll Island right now in the middle of some GAR stuff and broke away to join us. So give us a quick little, you know, recap of what's going on around the state and GAR as president this year.
Yeah, so absolutely. Everybody's focus point is the market. South Georgia, North Georgia, East, West, it doesn't matter, mountains, beach, farmland, everybody's kind of feeling the same thing and experiencing the same thing. We're getting ready. I'm in the middle of the AE Regional Conference, which is from association executives from 3 states. They're all here to have their conference that they do, and I was on a panel. And because everybody's so busy, member engagement is an issue. But that being said, GAR has started their marketing for their conference in our GAR annual conference and trade expo in person in Destin, August 30th through September 3rd. So I hope those of you that can break away, if you can't take a vacation, Brad, split a business trip and network with your fellow realtors across the state and come down and see us in Destin during that time. We are going to have some important business with board of directors. We're doing some strategic initiatives. We're doing some diversity, equity, inclusion changes. So there's a lot of stuff that's happening. GAR is very busy and working to improve. And I see you, Avery. I'm glad you're going to be there. I think we're going to have actually a decent contingency from Harry Norman, especially the Peachtree City office, because they're so supportive of me. And I appreciate that. As you are, Todd and Jenny, I appreciate your support this year. It's been a crazy year, but I'm still selling as the best that I can, even though I'm the GAR president. So if you want something done, ask the busiest person in the room to do it. Over and out.
There you go. Thank you, Dory. Appreciate it. Good stuff. Good updates. Thanks again for joining us. All right, Leslie, I know we're coming off of an amazing grand opening event up at our new home project, Grandview at Gateway. I think we had lots of folks out there, but
yeah,
what are you hearing and seeing?
Well, at first I heard you say my name and then my whole everything went blank, but luckily it came back. So I'm fine. So first of all, in neighborhoods with talking about neighborhoods with new detached single family homes, we had 62, we have currently active 62 neighborhoods in the 6 core counties that are delivering new homes. And these are new neighborhoods. They have so far, these 62 have delivered 3,466 homes as of the end of Q1. I expect that's about half of what we're going to get from them. The average sale price is $361,000. The average square footage is 2,700 square feet, 2,721 to be exact. Only 8 of these new neighborhoods, that's 13%, is inside the city limits. So of course, what that means is the vast majority of them are on the northern arc, but we don't count in the core counties some of the southern tier, which is really growing, as Dory just said, and I'll talk about that in a minute. As Eve mentioned, the issue here is construction, materials, and labor. The major things that we all heard about before were lumber spiked and concrete was impossible to get. Those are starting to work through the system. They're just kind of, I think of it as like bubbles in the hose, which were caused by the pandemic. And we're starting to work through those issues. Mills and things are coming back online. We're working out the logistics. But now what we're running into, just like Eve mentioned, we're building a house, everything seems to be going great, and then suddenly you can't get doorknobs, or the faucets have been discontinued, or everything that she listed before, that is real. So if you are working with clients in new construction, please go ahead and prepare them in advance. We're having to do that on our projects, that there could be delays that no one can foresee. But the properties are delivering, they're just moving right along. As far as attached housing, the latest report I have is from Haddow at the end of 2020. So as of the end of the year, there were 104 active condominium and townhouse projects, and those are all in the in-town market. This is reporting on the in-town market, which is by far the biggest attached market. These projects will yield 5,219 units. Of those, at the end of last year, a little over 1,800 were already sold and 543 were under contract. That means that a little over 2,800 remain. 57% of the unsold inventory is priced below $300 a square foot. And remember, when we're talking about townhouse and condominium product, that's a pretty reasonable price, for the product you're getting. 13% is priced above $400 a square foot, and that's our luxury product. So we've got 57% of this being sold at a reasonably affordable rate, for the masses. 13% is true luxury product. 77% of this attached inventory is townhouse product. So 2/3 is townhouse, 3/4 is townhouse, and 1/4 of this is condo flats. In mid-2007, there were 7,000 unsold condo units right before the crash, and only about 1,000 units sold that year. In 2012, we only had 143 units delivered, and we were on a downward trajectory from 2007. Just those were slowly being absorbed, around 1,000 a year, but the production just dried up. Those numbers crossed, and we actually had fewer units produced than sold in 2013. Now we're seeing those graphs diverge again. We're seeing more unsold units come and hit the market, the new units come and hit the market. Currently, we've got around 3,000 unsold units, and we're still ticking along at about 1,000 a year. So I predict that the condominium and townhouse market is going to be balanced well before the single family home market. And we can talk, I think we all know why COVID makes people not want to live quite as close together. Where I'm watching, dense urban areas may come back. They have a lot of momentum behind them. I'm talking about downtown, midtown, Buckhead, and the perimeter. For example, Midtown currently has 107 residential units were delivered since January 2020. However, in 2021, we're expecting 538 units. In 2022, 1,600. And then we already have another almost 1,300 slated to deliver in 2023. And these are units that are now being built. They will be delivered. Proposed or at some point in the approval process is over 3,400 units. This is in the 1.2 mile area of Midtown. So there are a lot of units coming in, and they are in the urban core. We think of these as smaller areas, but when you look at the number of people who live there and the concentration, we're talking about a lot of homes.
Mhm.
The other place I'm watching is South Atlanta, as Dory mentioned. Trilith, which you may know formerly as Pinewood Forest, built by the movie industry, is so cool. It's like Serenbe meets Avalon. It's like Hollywood in Portland, Oregon, eloped to Georgia and had a baby. It's super neat. You should see it. We're talking here about South Fulton County, Clayton, Coweta, Douglas, Fayette, and Henry counties. The reason they're so popular right now and so booming is because they have land. They actually have land. Lots of people want to stay close to the city or close to the airport or close to MARTA or whatever it is they want to be close to, but they also want to spread out on some acreage. The Aerotropolis office just listed a 2-acre lot this week, today, actually. So we have one for you. And that's what we're seeing a lot of in that area. You can spread out a little bit. I'm also looking at 55 and older communities. We have one, the Grandview at Gateway in Jasper, Georgia. Those are becoming very, very popular. The baby boomers are finally deciding to move out of their very desirable swim tennis neighborhoods so that the millennials can move in and have their grandchildren. So what we are seeing there in our project, as well as all the others, is that there are no spec homes. They're all sold, and we're 6 months out on a house, if not 9. So I think one of the greatest opportunities to build business is to go back through your list and find all the baby boomers you sold houses to a few years ago and help them move to Grandview. I'm also looking at suburbs that used to be kind of sleepy bedroom communities where you didn't even know you were going through this town, really. It was just sort of shopping centers and cul-de-sac neighborhoods. They are continuing to create city centers. Think what you've seen in Woodstock, Smyrna, and Roswell, and watch for Powder Springs, Mableton, Lilburn, Beaufort to create their own cool factor, to find themselves and kind of be who they were meant to be. And that's going to make them interesting and have a sense of community. This means that you're going to see more attached and smaller homes built in the town centers of these areas. That's what I think we're watching for trends. And then also, I know that vacation homes are still very, very popular. We have some for you at the Nest. Call Brad or Angela, and they'll be happy to put you in a vacation home. You can also VRBO and basically pay for itself. But essentially, that's what people are doing. A lot of people are investing in vacation homes that they know they can rent out to vacation renters. That's all I've got for now, but happy to answer any questions you may have. Just give me a call.
That
Let's
was
do a quick
probably,
question.
yeah, go ahead, Anthony.
Do you think that is a new trend because of COVID and people wanting to get out of the city and out of the dense population, or thinking, well, if this happens again, I'll be able to get out of town and go away where there's not that many people?
I think it's actually yes and no. I think the main reason that we're seeing this, that we were already starting to see this, is because, like I said, we're seeing the dense urban core. People don't realize how many people live in Midtown right now. It is a real, actual, true life city, like you're in a real city.
Mm-hmm.
And that's not something that actually Atlanta's really ever seen before. You have a lot of people living in downtown, Midtown, Buckhead and even Perimeter, who are in small quarters in a condo. They would love to have, and these are pretty high-end markets, very high-end markets.
Mm-hmm.
They're expensive
Absolutely.
homes. And these are professionals who have good incomes. So they, for a long time, have been, as we've urbanized, we've also had the interest in the ex-urban vacation home that's not too far of a drive away. And you can think of that in every big major city where there is that market that we just now started to get. In addition to that, the baby boomers are downsizing, and they are looking at those townhouses or flats just to be closer to things, be walkable, and not have the big yard to take care of every weekend. But they also want a place to get away. I think that those two factors, just COVID just poured octane on that and just made it just take off. Everybody started thinking, now's the time. And so that's what we're looking at.
Thank you.
And I also don't think that market's going to be a bad investment or dry up once the shock of COVID, the sort of the scramble to get away that COVID created, for the fundamentals that are underneath it that I mentioned earlier.
Thank you.
Sure.
Well, I don't know about you guys, but how happy are you that we've got Leslie running our new homes division for us? That was some incredible information in a very quick period of time. I think people should just go back and watch this last 20 minutes, honestly, if they want to get an idea of what's going on in and around Atlanta. I will say, you know, Karen McCrae couldn't be with us this afternoon. She sends her regrets, and really wanted to be here, but she did share a few things with me. You may have heard already, Amazon is really focused on Atlanta's west side. That's another area that we haven't even really touched on today that's just booming and exploding. And it's going to be part of a nearly 300-acre, it's the old rail yard over there. And ironically, this is the area that Atlanta pitched to Amazon back in 2018 when they were considering Atlanta as their HQ. And so we got that coming with about 3,800 people expected to come from there. Colin Connolly, who's the Cousins president and CEO, said that recently in an Atlanta Chamber economic update, he was bullish on future office growth. Midtown, going on to what Leslie was saying, is a great growth area with tech companies moving there and multifamily living options. So a lot of what Leslie just touched on. He believes that people will be back in the office more than you think, and because they're going to want more of a collaborative work environment. And the three things that continue to make Atlanta the choice of many companies are the airport, obviously, great infrastructure, and 3 great universities. So Brenda Robbins, who's the business recruitment director at Georgia Power, said on Atlanta economic growth, the office sector pipeline is full, at or above pre-pandemic level headcount. Projects looking at Atlanta are large with 500 plus headcount. However, many are with existing companies. Companies continue to be attracted to Atlanta because of their focus on diversity and inclusion, and they're more focused on existing workforce and expansion rather than lift and shift relocation, which is interesting. So it sounds like they're promoting people within who already live here. Within our own CCBS department, we are currently seeing that our direct corporate business is up almost 30% year over year compared to 2020. So we're getting a lot of things coming in from our relationships there. And broker to broker referrals are up 20%. So don't forget that as an option, a way to make some additional monies. We got people coming in, but we got some people going out as well. And we're currently, she and her team are currently working on 2 large group moves to Atlanta, with another one on the horizon. One is a Fortune 500 company that's currently out for bid, with their selection for their relocation management company to handle the business. And we were asked by 3 of these companies to be their choice of real estate companies in their proposals. So Karen and her team are doing a great job there as well. So Buzz, look up in the sky. Yeah, exactly, Dory. All right. So, man, that was a lot of info in 30 minutes, Jenny, and we haven't even started our stuff yet.
Yeah, thanks everybody for coming. This is really great. Seeing you, just kidding. We still have a few more updates. There were a couple of things in the chat, and some of you may have seen it, but for those who are driving or whatnot, need to be hands-free, I'll repeat them. So Dory commented, Amazon built a huge facility in Moreland, Coweta County, and they're expanding. And then Holly added that they have built a huge new place in Beaufort as well. So jokingly, I said that the drones are coming, but I think that that may be a reality sooner than we think. So interesting,
Well,
stay tuned.
Apparently you can now order a pizza from Domino's and it gets delivered to you in a non-manned vehicle. I don't know if you've seen those commercials or not. So it's like George Jetson's coming to Atlanta.
I love
All
it.
right.
That's why we live here.
I know, right? Okay, so I am going to do the screen share, which means most of you are going to go, like, won't be able to see you. And I know you're not going bye-bye, but we're not going to be able to see you. So if you have questions or want to say something, throw it in the chat there. Tori, I'll ask you to maybe help monitor us while Jenny and I are kind of running through the slides here. And I'm just got a little bit of a sense of relief here, because thank goodness what I'm getting ready to share with all of you guys from a data standpoint, what Jenny and I are getting ready to share actually goes along with what you guys talked about, because that'd have been really, really embarrassing if we were picking up trends that you guys weren't actually seeing out in the marketplace. So here we go with our version, our Dog Days of Summer H&R Market Realities edition. I just couldn't help the dog, man. He looks like he's having a great time there. I don't know what is in his glass of OJ. I'll just let you all speculate on that. And we already did our trends from the trenches. So again, thanks to all of you who kind of shared your feedback and insight as to what's been going on. I think by the chat there, people enjoyed it. So we'll probably continue this moving forward just to kind of get an idea of what's been going on. So we're going to jump right into this, Jenny, and we'll kind of ham and egg it and pass it off. And as my voice gets tired, I'll pass it off to you and vice versa. How's that sound?
Great.
All right, so real quick, I just wanted to take a look back to April. So this isn't today. I just, want to start with, let's take a look back where we were in April. Even though it's a simple looking graph, there's a lot of information on here. We've got it broken down into the 6 core counties. As you may remember, we were starting to see, or continuing to see, the price of the number of price reductions on the decline. What you have here is in the first column, the total number of units closed kind of over the last 60 to 90 days. Then we really started looking at, how many of those properties were selling above list price. And as you recall, we were kind of around that 40% range if you added all the counties together. So I just wanted to show you what it looked like not even, 90 days ago, roughly. So here is where we are today. Sales summary the last 60 days. The number of percent of price reduction continues to go down. So basically sellers are pretty much getting whatever they want. They're rarely having to reduce their price, but really what I want you to pay attention to is the percent above list price over the last 60 days. We are well above 60% on average for the entire metro, with Gwinnett County leading the way at 70%. And in future slides, you're going to see where we've actually broken this down for you in price ranges. So 0 to 500, 500 to $1 million, and $1 million and above. But I mean, to think that 2/3 of the market, Jenny, is now selling for above original list price. I don't know about you, but I was floored when I, was pulling that up.
Probably makes all of us want to sell our house, but then where would we live? That's probably not something that you are unfamiliar with hearing lately, but for those who do have that flexibility, it is a great opportunity to cash in. But yeah, 2/3 of homes selling above list price. That's pretty amazing.
Yep, so I'll let you take us through the key takeaways from there.
Sure. You kind of hinted at this based on the data, the number of homes reducing their list price decreases. I mean, it was 10 to 20 back in April. Now it's 8 to 14%. Total number, this was interesting just as a comparison. The total number of homes that closed in the last 60 days was 8,673. If you compare that with the previous 60 days, it went up. Which is surprising considering that the inventory is so low. So that's an increase of 14%. And then in the last 60 days, we talked about it, 2/3 sold a price higher than original list price. And shout out to Gwinnett for leading the charge.
Yep, like Brad said, what's a vacation? When you think that things have been so busy the last couple of months, even though people have been going out of town and on vacations and stuff, the activity is actually up from the previous last 60 days. So next slide we're going to take a look at, as we have in the past, is just what's been going on with median sales prices. And for the most part, except for DeKalb, that had a slight fall off from May to June, everybody's ahead for the month over the month. But Jenny, the year over year, and Dory alluded to it, down south side of town there at 30% since 2019. These are some pretty impressive, significant median price gains. So, and I need to change that from March to May. My apologies there. We'll get that corrected when the slides that we send out. So that's May 2020 comparison to June of 2021. So pretty incredible changes there.
And you mentioned that there's a bunch of different factors. One of the things that I'm particularly watching is the luxury market. And what you'll see in later slides is as you look at the absorption rate, but you also look at the numbers of homes that have sold, you'll see that in a couple of counties, it's starting to adjust or catch up a bit. But there's still really, really strong demand in the luxury market across Atlanta. I don't think it's softening. I think it is being more paced. So we'll get to that. But I do think that that has an effect on what we're seeing with median sales price.
Yep. Let's see. Question
Dory
in
had a
here.
question.
Yeah, median sales price versus average sales price. What should we use for data analysts? I've always said, Dory, that median is the better metric to use when you're trying to measure and gauge true price appreciation. And even the median change there isn't a reflection of absolute price appreciation. We're going to look at what it has been for Atlanta over the last 12 months. But the reason to use the median is the average. There's more ebbs and flows and skews. To Jenny's point, if you sell more up in the upper price range 1 month given another month, it can really skew your average sale price. So when you're talking about price appreciation and price gains, in my opinion, the median is the one to go with. Let's take a look at the next slide here. This is just kind of from a national level, just so you can get an idea of what's been going on with existing home prices across the country. The US on average is 23.6%, South at 22.6%, just slightly behind the West. So again, you know, our numbers here in Atlanta, you know, we were in the mid 20s to 30s from a couple slides ago. So we're tracking along just with pretty much what the rest of the South is doing in the country as a whole. And this is a slide that kind of shows you that impact of why we're seeing median and average sale prices go up. This is the first time since they've been measuring this that we're starting to even see a negative in the 100 to 250. We're just not building that product type. The average price of homes isn't there. And so you're actually seeing the number of sales in those price points on the decline. And then to your point, Jenny, about the almost 250% increase in the million plus and what's been going on in that market.
And last time we did our market update, it was in the million plus, it was 211%. So it's gone up since then, which is interesting because that shows that the last quarter has been really hot in the luxury market. But it's also interesting to watch the pendings and the number of homes in the absorption rate increase in a couple of areas. So we'll keep our eye on that to see if that trend is going to continue or if it's going to change.
Good stuff. And then I mentioned it a little bit ago, the Case-Shiller. Here are the actual numbers for through April. As you know, this is a trailing index. It lags about 2.5 months behind the current market. We should be getting May's numbers here. It's always the last Tuesday of the month. So it will be next Tuesday when Case-Shiller releases May's data. But for the year, this is the 20-city composite, 14.9% increase on a year-over-year basis. And so you could use that more or less as an appreciation guide over the last 12 months for the country. And then, as we have always done for you, we break out Atlanta specifically because it is an MSA that they measure. And you've got some information down there below the graph. The index as of April for Atlanta, we were at a 174.5. The index a year ago was at 156.9. So if you do the math there, it's basically a 17.6% increase. So Atlanta is actually outperforming the country in terms of year-over-year appreciation, according to the Case-Shiller. Anything you'd like to add to that, Jenny?
I'll just mention this. Raphael Bostic, who leads the Federal Reserve here in Atlanta, recently mentioned that from a GDP basis, which is how most economists measure the success of the economy, that we are fully recovered in the United States. But how the Fed measures that is that they look at full employment and inflation. And that according to that definition, we are not quite recovered. We still have some more jobs to gain before they would sort of wave the flag in that category and say, yes, we're recovered. And he also mentioned that the preferred target for inflation is about 2%. And currently it's higher than that. So we're keeping an eye on that as well.
Good stuff. And then just some key takeaways from the last few slides we took a look at. Month-to-month appreciation across the 6 core counties continues to increase. Significant median sale price year-over-year increases across all counties, with Forsyth leading the way at 33%. And the result of this increases, the median increases, continues to be a function of really a couple things: appreciation, selling more homes in the upper price ranges, and the overall price increases in the new home, new construction market, builders raising their prices due to construction costs and supply chain and labor costs and everything else. And then we touched on already the Case-Shiller, Atlanta outperforming the rest of the country at 17.6% versus 14.6%. So for the next several slides, we're not going to go into them detail by detail. They're really just going to be there for you to use after, depending on what county you're in. But what I do want to do is just kind of, again, for those of you that may not really know what you're looking at, just explain it. So it's the same for all 6 counties, all the same information. And we've broken it into the various price points: under 500, 500 to $1 million, and $1 million and above. This is all going to be for the last 60 days. What you're going to have is the number of units closed at that price point. The percentage below is the percent of the overall market. So in this case, 78.5% of all the sales were under 500. The number of price reductions. Then you're going to have the number of homes that sold for above list price and what that percentage is. So in this case, under 500, 66% of the homes sold for above original list price. And then you're going to have the total days on market for the 3 different categories. The first being when there was no price reduction required. The next for when a price reduction was required. And then what the total days on market was for those that sold above list price. So some interesting kind of numbers there. And in most cases, which doesn't come as a surprise, when you have multiple offers and homes selling for above asking price, original list price, they're even selling more quickly than homes that just didn't require a price reduction at all. The interesting thing is, and I didn't really pull it out, but just take my word for it, the total days on market for the list price reductions was cut in half, more or less, for the entire marketplace. So this was probably in the mid 50 range when we did this in May. This was up in the 60 and 70 range. And the reason I point that out is I can't believe I'm actually going to say this, that these words are going to come out of my mouth. I don't care what the seller wants to list the price for or wants to list the house for. Take the listing, and the chances are they're going to sell it for something close to that anyway. I mean, the statistics bear it right now. I'll probably eat my words in another 6 months or so, but I'd say for right now, take the listing. It doesn't matter what you put it on the market for. And then the next thing you have is just kind of your month supply and total days on market for the counties. And again, just some crazy, crazy numbers. Month supply for under 500 is a half of a month in Cherokee. And this trend continues all throughout all the counties. So as I quickly go through these slides, Jenny, is there anything that you'd like to add to kind of, these numbers?
Yeah, the only thing I want you to note is for those who are leaning into the luxury market, you'll notice, go back if you don't mind real quick to the Cherokee for a second. The million plus in Cherokee, advanced one, if you don't mind.
Yep.
There you go. So you'll see total days on market for 21 is 74. Total days on market for 20 is 36. So that shows that length of time is increasing. Same thing, it's the inverse for months of supply, but keep an eye on the total days on market, because that to me could be an indicator that the market is softening in that luxury market in a couple of potential counties.
Great pickup there. Let's see. So again, we have Cobb here, 68% of the market under 500. selling for above list price, again, trending similarly to the days on market, so forth and so on. The month supply, again, 0.5, even 3.7 at the million and above. Sherry Hardy, if you're on here, I know you're really well aware of that as a data statistics person like me. DeKalb County, 61% of the market, even almost over half for the 500 to a million. Again, total days on market and month supply, low, 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 low. 2.1 months supply for the million and above. Fulton, this is something I will point out here. We are really starting to shift again more and more. This 45% of the market under 500, almost 40% is 500 to a million, and 17% million and above. Those numbers are really beginning to shift. When we did this in April, this was well above 50% was the under 500. So again, big price appreciation in Fulton, and we're starting to continue to see those numbers. But you know, again, 54% of the market, 500 a million, getting above asking price. Again, 2.1 months supply right now for million and above in Fulton. Forsyth, look at that, 73% selling for above asking price for under 500,000. Forsyth, I don't know how you guys are even, it's just a nutso up there right now, the wild, wild west of all places with inventory and new construction and everything else. 0.4 months supply, 1.4 months supply for million. And then we finally finish up with Gwinnett, leading again the way at 75% for under 500. And again, just it's, you know, I love how the numbers don't vary much from county to county. It's just all across Atlanta. And again, a 0.5 month supply and a 2.8 for million and above. So there really isn't a bad county to be in right now. It doesn't matter what your price point is. And yeah, it's just amazing. So current inventory and pending sales, take a quick look and what's been going on there. And I apologize again, y'all, that this is kind of small information, but hopefully it's a little easier to see and digest when you get it in person. We're starting to see some red deltas here, which maybe initially would cause some concern, but I think that we're really seeing it more as a function of a lot of Atlanta being out of town. A lot of you alluded to the fact that you're seeing things slow down a little bit, just kind of a little pause in activity. Will be really interesting to see what happens in a couple of weeks when the kids do go back to school, as Butch mentioned earlier in August. But, you know, if you look at initially, if you were like, oh my God, look at this, you know, especially where if you can see my mouse moving, the current versus the previous month to date, through the first 12 days of July, when I was pulling this information, we'd only had 249 closings compared to over 2,000 just 30 days prior, which is an 88% decline. But keep in mind, we got the 4th of July that kind of was sandwiched in there and kind of falling on the Sunday, which was the 5th Monday for a lot of people and people traveling and everything else. Not too concerned about that, especially if you look at just the total year in general. We're still about 5.4% ahead in closings and 5.3% ahead. And this is for all of Atlanta, 6 core counties, no price point breakdown. So the pending is still up, and the pending isn't nearly as down as the closing. So we've got still good pending inventory. But anything you noticed here, Jenny, that you wanted to comment on?
Just one thing on this one and the next few. If you keep an eye on the new listing at the chart at the bottom, I think it's the 3rd line, and you just look at how the number sort of was high and then trended downward. And then now we're back outperforming the number of listings, as you can see on the overall market. And you'll see that mirrored in each of the next slides, depending on how you slice and dice it. I think that's very positive for all of us because it means that there are houses that we have to sell. And that's good news because we have a lot of buyers who want to buy them.
Yep, great point, great observation. And another place you can look too is if you look at a couple lines down, the absorption rate. Whether you're looking at it based on closed sales percentage or pended sales, you'll notice too that we are seeing kind of a steady decline over the last 4 months, which again is a function of supply and pace of sales. So as we continue to kind of see these numbers come down, it's showing you that you're getting a little more maybe balance to the market. Certainly not a balanced market, but that's a good sign actually to see that we're kind of trending down. That means inventory is kind of catching up with the pace. Next slide we have here is going to be for homes under 500,000. Again, tracking similarly in terms of the declines and everything. Again, not real worried about it. I think it's a big function of everybody just being out and about. But the same things that Jenny alluded to, the number of listings going up, kind of sliding off a little bit in May, but went back up in June. I expect we'll see it go back up in July. And then the absorption rates also trending in a downward path. And that will continue for 500 to a million and $1 million and above. Quick little snapshot here too is, for example, here 0.9 months supply overall for the 6 core counties compared to a 2.9 month supply a year ago. We've always been around that 1 month supply over the last 3 or 4 months in this price point. And again, we'll take a look at it for the $1 million and above. A year ago, we were at a 7.8 month supply of $1 million and above, which would be maybe a balanced market. We're at a 2.3 right now. Again, touching on what you mentioned earlier, Jenny, the luxury market has been pretty robust over the last several months. So,
yeah, and Eve posted a comment. It is true that a lot of the new construction is not necessarily reflected in here for a variety of reasons. One, they never really made it to FMLS, so those are this is what we use to track that. So a lot of what Leslie shared is from the actual data from builder surveys and visiting neighborhoods that are en route. So that's why we try to offer not only this data point, but also the information that he was sharing earlier.
Yeah, and we'll get lots of more good information from a new construction standpoint. We're members of Metro Study, and they're going to have their Q2 summary the first part of August. I know that myself, Leslie, Luke, and probably several others of us will be on that call to listen to see what's specifically happening more in the new homes inventory arena. So just on a year-over-year basis across the country, this is what we're seeing in terms of pending home sale activity. Really, you might think, well, what in the heck's going on up in the Northeast? Well, as you recall, they just were the kind of the last ones to the dance when it came from getting out from underneath the pandemic. So it's no surprise to see them kind of catching back up with the rest of the country. But the South at 6.1, again, I'm not surprised to see us kind of on the lower end because we were really the first. I mean, we were essential businesses early out of the gate. And so we kind of have had more of a steady increase over the last 12 months compared to other parts of the country. But just the country in general right now at 13.1%. And then again, why don't you run through the quick takeaways here, Jenny?
Sure. New listings coming to the market has improved, as we've been talking about and seeing as evidence there. Absorption rates are declining, which is good. The best way to anticipate future direction is keep an eye on pending activity. And that looks really strong for us in July, and based on the numbers should continue. And we've seen a slight market shift in June and July, as many of you commented at the beginning. And we are going to see what happens with that. 2 months is not a trend, but longer than 2 months could start to indicate a trend. So we will continue to keep an eye on that.
All right, and moving along, just some good sound bites for some of you if you want to use any of these. It looks like existing inventory is starting to inch up, which is good news for a housing market parched for more supply, and that came from the chief economist over at First American. And then we're seeing another significant week over week gain in inventory. Great news for buyers. And then the last one, supply is expected to improve, which will give buyers more options and help tamp down record high asking prices for existing homes. Coming from Lawrence Yun, and I'm sure Dory, he will probably echo that sentiment tomorrow or whenever it is that you have that opportunity to listen from him at GAR. Inventory levels for single family homes. And again, this is a national statistic coming from NAR, but like we were talking about, it's happening across the country, like it's happening here in Atlanta, starting to see some nice improvement in the total number of homes coming onto the market and kind of helping boost up the inventory. And then just a month over month change from where we were. And you can see Georgia kind of sticking out there in the south, which is positive for us, a 10.2 month increase on a month-over-month basis. Our neighbors to the east and west of us and south aren't enjoying that as much as we are. So again, a good sign for Georgia in general about more inventory coming onto the market.
And forget about moving to Hawaii, by the way.
Yeah, no. So, although that would be nice. I think we need a satellite office in Kauai, Jenny. We can talk about that later.
Sounds lovely.
The improvement we saw in new listings growth from May to June shows sellers are entering the market historically later in the season, which could mean we'll see home buying continuing into the fall as buyers jump at new opportunities. I think you and I both firmly believe that to be the case, Jenny, and expect a very strong pace of sales in the third quarter, even going into the fourth quarter.
Yeah, we still haven't hit our typical seasonality yet. We've been sort of out of that rhythm for, I would say, almost 2 years, and continuing for the rest of the year, I think it will be more brisk than is the historical norms.
So a few seller talking points though, let's try and not let them be too unrealistic, but they see the headlines just like you and I do and what's going on with prices and everything else. So let's just try and keep them at least in the same universe, maybe bring them in from Pluto, which by the way, got renamed as a planet, which I thought was interesting. Total side note. Wait and you will miss out on an extremely attractive market. It's never been a better time to sell, and price appreciation, I think we will see it moderate as rates and inventory rise later this year. I think, the whole cliche of there's never been a better time to sell is really, it is now, because, the only time that you should have sold back then is when you're in the future and you look in the rear view and you're like, dang it, I wish we'd have put our house on the market last summer. So I think, as much as we can remind sellers of that, it bodes us well to do so. Run us through the condo analysis real quick, Jenny, for areas primarily in town, midtown, downtown, in Buckhead.
Sure. I found a couple of interesting notes in this. If you look at the new listings for Area 21, you can see it rose significantly in July, August of last year, and then it kind of took a dip early this year, and we're back up to strong numbers, even outperforming in March through June any of the last 12 months. So that shows some of what Anthony was talking about and some of what Butch and Leslie were talking about. The pended numbers peaked in March, and they have gone down. So part of what that says to me is, if you'll flip to the next one.
Yep, absolutely.
That the affordability has adjusted, and they are outpricing in Area 21, and some of that is picking up in areas 23 and 24. And why I say that is because if you look at the number of pendings in these areas, they continue to be on the rise. So it's just an interesting nuance there. We still have good inventory coming on the market as far as new listings, but that's something for us to watch. And then you can see the pendeds are up, current versus previous year to date in these areas, and the for sale is down, but is improving. So there's some catching up happening. We're not caught up, but certainly some good info.
Yeah, and again, these low negative numbers or these high negative numbers here, just a function of the July 4th weekend and everything else. So no reason to kind of say the sky is falling at this point in time. So now we're going to jump into some other trends and info. Some of this will be specific to Atlanta. Other will kind of be more on the national scope or scene, or even to the Southeast, but we're just going to run through it real quick. What's the mindset of buyers these days? Well, any of you that have been working with buyers can kind of, we should have put maybe what's the mindset of agents working with buyers and the buyers these days, but they're probably a little similar. But just a real quick thing from Ivy Zellman in her June broker report. Overall, the month's overall home buyer demand rating equaled 86 on a scale of 0 to 100, down from 88 the previous month, marking the first sequential decline since November. So I think buyers, as many of you probably know, are tired of getting beat up and getting their teeth kicked in, and not even being the bridesmaid, but I don't even think they got invited to the wedding half the time, with all these multiple offers coming in. But that's kind of what's been going on. Also, another little kind of indicator here, telltale sign, percent of respondents who say it's a good time to buy. Well, a year ago, buyers were like, woohoo, let's go. 61% of them, thought it was a great time. Now look where we are in May, almost cut in half. 35% say now is a good time to buy. And again, I think just the market realities have just really caught up with them. And, they just, if they don't have to absolutely buy, I think people are kind of tapping the brakes and saying, we're going to maybe wait for things to cool down a little bit and maybe get some more inventory onto the market. Monthly showing time index is kind of also showing some similar signs. This is just kind of giving an idea of how many showings a home has. This is, again, a national number going back to January of last year. Then, of course, the red is here, the pandemic, and then we came up through the summer last year. So even though it's on a slight decline, we're still well above where we were a year ago when we were kind of coming out of the pandemic. So I think activity, this is street traffic, how many people are out wanting to look at houses and are looking at houses. So even though it's come down from the high of March and even April to 248, still very, very strong if you look at it compared to a period of time over the last 18 months. And then the buyer fatigue, Jenny, run us through this.
Sure. And then there was an interesting question from Clark that we'll touch on as well. Realities of buyer fatigue, record price appreciation, no surprise. Low inventory, also no surprise. Record high percentage of sales over list price, that is a surprise. Not that there is it, not that that exists, but the level to which it exists. Record low days on the market and historically low mortgage rates. So the interesting thing about the mortgage rates, with all of that fatigue, I'll echo what Todd said earlier, it's still a great time. I think this is one of those things where the people who are the most patient, it really is going to pay off for them. And while they think they might be overpaying now, I do think they'll look back and say, gosh, I'm really glad I did that when I did it. I'm glad I stuck it out.
Yeah. And, we've talked in the past about, how can you, when you're working with buyers, really make your offer stand out amongst the others. And we've talked about tactics and strategies and so forth and so on. But I keep hearing over and over and over, agents helping their buyers win the bidding war because they simply picked up the phone and called that listing agent and said, hey, what do we need to do to make our offer the most attractive? What do you want us to do in terms of how long the seller can stay in the property afterwards? And kind of asking that listing agent, tell me what I can do to win. I mean, we heard that, we've been hearing that a lot, Jenny.
And kudos to all of you who are those listing agents who answer your phone.
Yeah.
You're probably getting pummeled with calls with the same question. And where the rubber meets the road and why we truly believe in what we're doing is because that is where we really show our difference and our service to our clients. And you guys are the best at that.
So you want to take a stab at Clark's question, Jenny?
Sure. I think his question was, is the whole askew market and inventory because, more senior sellers are not tied to the school schedule? And I would say not necessarily. That could be the case. But I think what it is some of them were more cautious during COVID. And now that we're coming out of that, that's why we think inventory is growing, at least one of the factors for why inventory is growing, and probably will continue even into the fall and maybe even winter.
Yep. And don't forget what Leslie's comment was earlier. Let's help them get out of their baby boomer house and into something like the Gateway at Grandview, one of those types of properties. So, and buyer talking points. Expect a turn in the market in the coming months. We're already beginning to see a slight shift. It's starting to happen. So for those that do have the ability to remain patient, I think their patience will pay off. Can't wait too long though, because you never know what's going to happen with mortgage rates and so forth and so on. The market's still hyper competitive. Summer is though when serious buyers commit 100%. So for those of you working with buyers and they're looking in the summer, they probably are pretty committed to the process right now. And then again, don't get left behind. I mean, you just if you have the ability to wait, but don't get left in the dust and behind. So, and then another little thing from JP Morgan, home buyers, this is really for home buyers. Interest rates are still historically low, though they are inching up. Housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon, and we believe they are more likely to keep rising. And then if you are looking to purchase a new home, conditions now may be better than 12 months later or hence. So again, you know, if they can do it and can win, I'd say buy now. All right. I forgot to ask you, Jenny, you know that secret place where we keep our crystal ball? You know, we have it under lock and key there in the office.
In the safe.
Yeah, in the safe. Did you pull that out? So when we can, okay, good. So we got the forecast, second half of 2021, some things that we think is going to happen in some of the pundits out there in the marketplace. First is home sales. We forecast them to increase nicely for the remainder of 2021 and continue doing well in 2022. This is coming from Fannie Mae, Freddie Mac, and the Mortgage Bankers Association, kind of giving you the totals here. Just to give you a reference point, in 2020, the total number of home sales in the country was 6.5. This is what we're expecting in 2021 and what they're expecting in 2022. I expect the South to continue this trend just as soon as the builders can catch up building new construction, which I think is going to be one of the keys to kind of getting us more towards a balanced market. I'll let you take this one, Jenny.
Sure. I'm in with Eve on those foundation ties. Let's do it. Home price forecasts, you'll see here, hey, guess what? It's expected to stay strong. So no surprise, you'll see the numbers there by the different entities, but basically almost a 9% average for all the forecasts.
Yep, and that'll be closing out the rest of this year at 9%. And then where do we think housing, forecast for housing and appreciation? When are we going to start returning to historical norms? As you recall, typical appreciation in the normal, a balanced market is anywhere from, they say 3 to 5%, 4 to 6%, somewhere in that range. And so this kind of gives you an idea of where we expect things to go over the next 5 years.
Before you click, this slide is an excellent slide for the sellers who are going to ask you, when is the market?
Hello?
Did we lose Jenny? Hello?
Todd, we can hear you, but I think we lost Jenny.
Okay, we lost Jenny. Okay, very good. Well, we will keep going until she can jump back on. But I think what she was getting ready to say was this is a great slide to use when that seller asks, when is the time to sell? Obviously, 2021 is the time to sell if we believe kind of what these forecasts say. Still not a bad time in 2022, but beyond that is going to get slower and slower. Are you back with us, Jenny?
I hope so. Thanks.
Yes, you are. So this is, again, I think a really great slide. And what you're looking at here is what has happened with home equity over the last 12 months. And so the average gain in equity for mortgaged homes was $33,400. And the current average equity of the homes that are mortgaged is $216,000 per home. That's how much equity each home has in the country right now. Almost 40% of all homes are owned free and clear. And that 19.6% has been the increase in equity, totaling over 1.9 trillion in equity realized over the last 12 months. And you may ask, okay, that's great for homeowners, but why is that important to me and important to the market? We're going to talk about that in a little bit as it relates to the forbearances getting ready to come and the foreclosure, the potential for foreclosures and everything else. But I think, again, this is a great slide to share with a buyer, because if you want to get in now. And what you're seeing is here right now, if you were to buy a home in 2021 and the price be $350,000, in 5 years, you'll probably have about $93,000 in equity over a 5 year. Now, I don't know about you. I said this the other day. That's a pretty solid guarantee, a lot more predictable than the stock market. Not trying to say anything about not putting some money in the stock market, but if you want steady and reliable, I think this is a great slide to share. Any comments on that, Jenny?
I agree.
She concurs. All right. Builder confidence. Let's talk a little bit about some new home stuff. This is coming from the National Association of Home Builders, and it's kind of their market index of kind of what they're feeling and what's going on with them. There was a little bit of a slip over the last couple of months in terms of their confidence and what they're seeing out in the marketplace. They rate market conditions for the sale of new homes at the present time and in the next 6 months, as well as the traffic of prospective buyers of new homes. So it's kind of gone down a little bit from where they were in November and December of last year, but nowhere near where it was March and April of last year when they're like, oh gosh, man, this is going to be awful. Steady decline up and I think, again, that's mostly because of lumber, labor, and land concerns that we've already mentioned, just some of those dynamics that play into that. And then just some kind of trends from what we're seeing from Zelman and Associates. They do a home building survey every month. And this was some of the sound bites that just came out from that survey that was released last week. It says the majority of home building contacts continuing to intentionally limit sales due to supply side pressures. Gauging true demand trends is difficult at this time because they're artificially kind of putting a ceiling on how much they can sell. As orders have decelerated sharply, though, in recent months, production continues to catch up. In fact, the communities that were surveyed, the share of them capping sales this month ticked lower from May, and they expect home builders to continue pulling back on sales caps in the second half of the year. Leslie, anything you can want to jump in and add, feel free to as I go through this. And then we believe that true underlying demand is stronger than implied by recent order activity, but is likely well below levels achieved during the pandemic. As more supply comes online, this new equilibrium should become more apparent, likely resulting in moderating pricing and margins in the quarter ahead. And then just some real key takeaways. The survey score falls to its lowest level of 2021 as buyer frenzy wanes. Seasonally adjusted order pace weakens for the 5th straight month. Again, a lot of that being dictated by them pulling back on available inventory that's there. Some builders are beginning to stop limiting sales, and still the orders are weakening, which is maybe a little bit indicative of the buyers just kind of being tired of getting beat up and everything else. Production gap narrows, starts growth outpaces order growth again. So they're starting more homes than they are actually putting them under contract, which helps us with the inventory situation. The annualized price growth decelerates a little bit, but the incentives inch higher, starting to see the builders start offering incentives again. They pulled those back. Hopefully, maybe they'll start paying you guys your fair and full commissions again too, instead of beating you up at the same time as well. And then cancellation rates lift, most likely due as a result of their ability to deliver on time. And then escalation clauses are also likely culprits. We heard that mentioned, I think, by Eve, that builders are starting to do these escalation clauses. Then you probably got buyers coming in with buyer's remorse and wanting to get out of those contracts. And then last but not least, cost inflation continues to accelerate despite lumber reprieve. So anything? Yeah, go ahead, Leslie. Yeah.
I would add a couple of things to this. I think some of these takeaways we're seeing more on a national level than on the Atlanta level. I mean, pretty much from the research I've seen, from people I've talked with, and certainly what we're seeing on our properties, we are not seeing our sales weaken, nor are we able to keep up with them. The other thing that I think on the slide before this that talks a lot about the actual materials pipelines. Yes, there were a lot of mills that were stopped and logging operations stopped because of the pandemic. Those are all fired back up, and we're getting the kinks out of the construction, the logistics pipeline. But one thing that particularly hit Georgia hard over the past decade is that we've, for as long as I can remember, and really anybody else who's alive, real estate construction has been a huge part of our economy because Atlanta's been such a growing city for the past 50 plus years. The thing is, in 2008, all those jobs went away. And what that meant was that skilled labor force had to retrain for other things, and people weren't going into those trades. And so that's one of the main things that's holding Atlanta back from delivering as fast as the demand would require, is because we're still ramping up and rebuilding, retooling our construction industries. And if you think about it, we've had some other industries who've come in and taken those places. So the tech industry, since really the late 90s, but particularly recently, the tech industry has moved into Atlanta. And also the film industry has moved into Atlanta. And those have taken a lot of, those have taken a lot of people at all skill levels who might have been in manufacturing.
Great points. And thank you for adding some clarity to more specifically what's going on in our marketplace. All right. For those of you that subscribe to Inman, or this may have even come across your email about a week and a half ago or so, it was a scary headline: Foreclosure Watch, the 10 most at-risk US cities. And believe it or not, guess it, Atlanta was one of the top 10 that they mentioned. They had their rationale behind it, but we're going to go into some reasons why. Just don't think that that's going to be the case. Jenny, you want to touch on just what we're seeing in the forbearances and have been seeing since last May?
Sure. Basically, they're dropping. So the number of homes or mortgages that were in forbearance are steadily decreasing, which is what we hope happens. That's what we want to happen. And if you go to the next slide, we'll show you a couple of reasons why. This talks about mortgages with less than 10% equity. And you can see, obviously, the highest number is with 18 months deferred PITI. So interesting, there is still well below the norm in the distressed period. So all of those, what both of those slides mean is we're in a much better position than we were in leading up to when the distressed market really took effect.
Yeah, and if the forbearances, they're going continuing to go down, and that time period for their ability to stay in forbearance is coming up and ending for most. And so what's happening is those people are having to make one of three decisions. They're either trying to reach out to their lender, see if they can tack the payments that they missed onto the end of onto their mortgage. And assuming that they're in a good equity position, most of the lenders are agreeing to do that, which is why this slide is so important. You only have 4% of the overall market right now with less than 10% equity of people who are in forbearance. And so then if they can't do that though and tack it on, they probably can sell, put it on the market, and it not have to be a short sale situation or anything like that, because again, they're in a good equity position to be able to sell it, pay the commissions, or do whatever else, and then move on and go. And then the other thing would be the unfortunate, situation of a foreclosure, but I think which is going to be a very, very small percentage. And this slide indicates kind of what percentage of distressed property sales we are currently seeing in May, and it's basically 1%. Now, if you kind of think back to what it was back in the scary days of 2011 and 12, where it peaked out at 35%. We were in the land of short sales and foreclosures. Only 1% of the market right now is foreclosures. And we don't really anticipate that going up sharply or rising even that much. I mean, even 2 years ago in June, we were at 4%. So it continues to decline and go down. And again, talked about equity, before I hear people, is there a bubble around the corner? Do you expect a housing bubble, prices, so forth and so on? And we're just not in the same fundamentals that we were back in 2006 and 7. Look at how people use their houses as credit cards, and the lenders were there to give them 120-25% of the home's value in terms of cash out refinances. And that's a lot of what ended up getting people turned upside down. And this is just the number of people who have cashed out by refinancing the billions. Even in 2020, it was pretty high, but this is through the first quarter in 2021, and it's still probably going to be at about the 2020 levels. So we're not seeing a huge amount of that either. Anything you'd like to add to that, Jenny?
I think Diane had a great comment, which is that banks and lenders generally have a 3% number for default as kind of their benchmark. And so the fact that we are below that is a great sign.
Yep. And then this again coming from Bill McBride over at Calculated Risk. For Q1 2021, the net equity extraction was 41 billion, or just 0.8% of disposable personal income. This is nothing like the amount of equity extraction during the housing bubble as a percentage of DPI. So again, we're not in the same circumstances that we were a year ago. Real quick, mortgage rate projections, where are they going? At least through the second quarter of 2022. Here are 4 of the big entities: Freddie Mac, Fannie Mae, mortgage bankers, and NAR. You can kind of see in 2021, they're expecting in the low 3s and up to 3.37. Maybe a year from now in the 3.5, 3.6 range, but they're not expecting any huge movements there. So buyers can still enjoy some incredible low mortgage rates. However, this is interesting to take a look at, and it is what has been going on as a result of the increase in overall sales prices and how that's affecting a monthly mortgage payment. And really over the last 4 months, we've seen a pretty good tick up of what's been going on in terms of the average monthly payment. And we were at a little over $1,000 in January, and now we're up to $1,184 through April. Again, not a function of interest rates as much as it is sale prices. So you start hearing more and more about how's that affecting affordability, and what's going to happen with that. Well, even though those mortgage payments are going up on a monthly basis, what you're looking at here is what the housing affordability index from 1990 to present day. And the higher the index, it's kind of the reverse of what you would think. The higher the index, the more affordable the market is. So we capped out in terms of affordability back in 2012, when you recall we had 35% of the market was foreclosures, selling well below initial value. The Case-Shiller dipped into the 70s for Atlanta as an MSA. We've obviously reversed that by 100 points, but that's what caused great affordability, was that homes were selling well below market value. But even so, our index as of today is at 158, which is certainly much better than the heyday of 2006, 7, and 8. So while you might think, yeah, maybe we're outpricing ourselves and prices are going up and how that's impacting affordability, we still have good affordability here. Jenny, anything to add?
I agree.
Thank you. That's why we're such a good team. All right, and then finally, these outsized increases have raised concerns that a home price bubble is emerging. However, conditions today are quite different than the early 2000s, particularly in terms of credit availability. The current climate house prices instead reflect strong demand amid tight supply, helped along by record low interest rates. And that came from Harvard's 2021 State of the Nation's Housing. So that concludes today's market realities. A lot of information shared with you guys. Probably, if you're like me, my mind kind of hurts right now. I think I need to put my brain on ice, or at least go out and enjoy the vitamin D that I see outside my window right now before the next wave of rain moves in. But any comments, feedback? Jenny, anything you'd like to add before we close it out?
I just want to say thanks to you all for tuning in and for your great comments and helpful insights. Thanks to those who gave the updates from the trenches. This is why we're so good, because we operate together and we share info with each other, and that makes us all better. Huge thanks to Todd for pulling this every quarter. It's so hugely beneficial to all of us. So round of applause on everyone's part.
Yeah, no, absolutely. It's a team effort, all of this. So appreciate all of you being here, and have a great week, and we will see you soon. Take care.